Good morning, everyone. This is Nathan Lindorf with The Rational Independent. Today's Reddit Rant, we are investigating an article from an outlet I've never heard of before, so we're going to have some interesting times there. This article is from truthout.org, entitled, Democrats Introduce Bill to Quadruple Corporate Stock Buybacks Tax. I know this kind of tax policy and fiscal analysis can be really boring to most people. I'm a little bit of a nerd, but I'm not an expert in this area, so I'll try and keep it interesting without getting too far down into the weeds. The long story short of even what we're talking about is that a corporation has a certain amount, a publicly traded corporation has a certain amount of stock that's available for the public to purchase. And the price per share is how much it would take for you to buy one sliver of the company. So if you have 1 million shares and they're worth $10 each, your company is worth $10 million. But what corporations are able to do is do what's called a stock buyback. In other words, let's say last year they had a profit of $1 million and they decided to disperse half that profit out to the people who own shares. That's called a dividend. But they wanted to take the other half and buy out $500,000 worth of shares on the market. So what that means is they use corporate profits to reduce the total number of shares that are in the marketplace. When you do that, when there's a demand for something and you make it scarcer, the price goes up. Now, most of the time, the price of a stock goes up when the value of the company goes up, as it produces more goods, as it operates more efficiently, as it innovates. But a stock buyback creates an increase in price without an increase in value. And it can, there's a legitimate case to be made that that is a way of manipulating stock price. Because most of the time, executives and major shareholders and the like, they all get, there's often incentives in contracts for key executives in a company that says, we want you to be invested in increasing the value of the company. So we want you to, in order to incentivize you to be committed to increasing the value of the company as the CEO, as the CFO, whatever. During the next 5 years, if the price of our stock doubles in value, it hits whatever target you set in the contract. If it hits this price, you're going to get a bonus. So you can see this, there's an incentive for executives and other major players to say, okay, well, if we're at $10 a share right now, and I get a bonus if we get to $15 a share, then I could work really hard and make the company operate more efficiently and make us more valuable, and we'd be worth $15 a share. Or I can borrow some money and use some of the profits that we have to buy back some of the stock that's out there, let's say a quarter of it or 20% of it, thus reducing the amount that's available, thus inflating the price. And now, voila, I hit my target and I personally get a big check. If we go much beyond that level of detail, we're going to end up down in the weeds. And I want to keep this high enough level to be accessible. That's basically the behavior that's being objected to. Now, we talked a little bit about this the other day, the idea that capitalism, unbounded by personal morality, is prone to corruption. It's terrible. It's destructive. It's not good. We talked about Adam Smith, how he first wrote moral sentiments, followed by The Wealth of Nations. In other words, the invisible hand of the marketplace only behaves properly when the people in the marketplace are moral players. So what you have is the risk of immoral behavior by market participants. And you have Democrats, true to form, saying, here's a moral risk, and we're going to fix it through legislation. We're going to try and control people's behavior. It's a fool's errand while the moral prescription is accurate, that corruption is bad, that manipulation of stock prices is bad, I agree. But the fix can't be government is going to tax this behavior into oblivion. That doesn't fix anything. Every time you introduce a government program to try and modify marketplace behavior, you are going to create confounds. You're going to create situations that you fixed one thing, you hammered down one thing, and over here something else came loose. You're going to create, I think the economist term is negative externalities. Every time you have government interfere with market behavior, you will inevitably create negative externalities. Another way of putting that is perverse incentives. So, as an example, it's a tragedy to have a child go hungry because their dad is a deadbeat and their mom is working all the time but doesn't, or maybe the mom is disabled and so they're living in poverty. And that's a tragedy. The government's solution to that is, if you're a single mother without a father in the home, we'll give you money to live so you don't have to be in poverty. The negative externality is now market participants look at that, run a cost-benefit analysis and say, I'm more willing to shack up with someone and leave because if we make a baby, I don't have to stick around for it because the government is going to pay for it. So you've created a perverse incentive. You've twisted the behavior of market participants by engaging in government manipulation. So stock buybacks can be very manipulative and bad. Now, there are reasons why it's also a legitimate business activity. But again, we can't get too far down the weeds. So now let's take a look at Truth Out and the way they present this. So what they're looking to do is target this behavior because in the last couple of years, we've had a record number of stock buybacks, over $1 trillion among S&P 500 companies in 2022 alone. So this is a major behavior. This is a big thing that's happening. Now, my question is, as I look at this, what is driving these businesses to make this decision? There's a couple of things that are potential alternate explanations. But this article doesn't really spend a lot of time on that. This author, I can't speak for the outlet as a whole because I'm not as familiar with it, but this author seems to present this conversation through the lens of rich people bad, corporate greed bad, we need the government to come in and squash those evil, rich, bad guys because they're manipulating the marketplace to enrich themselves. And while there are guys who do that, that's not the whole picture. One of the things that I think is interesting about the way that the angle of this article is it addresses one of the reasons why companies might be doing this, which is recent record inflation. Because inflation makes it expensive to hold on to cash. Inflation makes it expensive for a business to stay liquid because your cash is going down in value because of inflation. That's how inflation works. Inflation literally means the money that you're holding is worth less than it was yesterday or last year. So they say, hey, we have high inflation rates. Then it says, largely driven by corporations jacking up prices in order to boost profits. So they're saying, we have inflation, but it's private companies' fault as to why we have inflation. They are inflating prices so they can make more money, and that's why we have inflation. And that is either manipulative or grossly oversimplistic. There are a variety of reasons why we're suffering from inflation, and corporate actions are part of it, but they are not the whole picture. At a bare minimum, You need to give some attribution to inflation, to Federal Reserve policy, to printing, to artificially low interest rates for an extended period of time, government stimulus and relief packages for COVID under Trump and Biden. This is not a partisan issue. Big government loves to write big checks. It's a more complicated picture. And if we want to do a deep dive into inflation, we can. It's outside the scope of today, and you get down in the weeds real fast. It's enough to put you to sleep if you're not already kind of a nerd about that sort of thing. They like to blame in this, they're saying stock buybacks spiked as a behavior after the Trump tax cuts. So they want to say, look, this is Trump's fault. Again, we can dig into that and try and understand the behavior and figure out what's driving this. Honestly, here's the thing. This is why I'm not a rabid Trump fan. He made some good decisions on social policy. He made some good decisions personally and politically. And he made some terrible decisions policy-wise, including who he trusted within his administration to write policy and how much he delegated out and allowed the government establishment figures to run on autopilot. Probably discounting the fact that left and right together, the uniparty, Republican and Democrat, they all want bigger government. They all want bigger business. They all want to enrich themselves by fostering the incestuous relationship between really big business and really big government. It's gross. It's something that I am not a fan of. I'm a big fan of private corporations. I'm a big fan of the free market. But what we have is resembles that less and less. The simple fact is, we have so much government interference in the marketplace. We have so much regulation and red tape that it protects the entrenched business interests that are already there, that are paying for this additional legislation, that makes it harder for new, innovative market participants to compete against them. That is a pattern that's been going on a very long time. It's obvious if you're willing to look at it. I don't like any of that. But the powers that be are the powers that be. I mean, part of critical thinking is recognizing the reality of what we have today. And what we have today is a Democrat Party that wants to enrich itself by expanding big government, and a Republican Party that wants to enrich itself by also expanding big corporations. And the two of those things, the best friend of big government is big corporations. The two of those things go hand in hand, and everyone in the party with their hand in the cookie jar gets richer and fatter, and it's gross. It's not what we were designed to be. It's not what we have to be going forward, but it's what we are today. So we're going to keep going forward. We're going to keep looking at things. We're going to see what we can do to try and find a better way forward. Thank you for your time. Have a wonderful day.